Is investing in mutual fund a good choice? In this video, I will help you to get the idea of investing in mutual fund, starting from the introduction, benefit, risk and assumption to help you to decide whether investing in mutual fund is a good choice. You may need to consider on starting saving for future. No matter what age are you now, know that there are three different investing companies. There are the unit investment trust, open-end fund, and closed-end fund. However, in this video, we will focus more on mutual fund. Mutual fund investing company is more like a place that collected sum of money from many investors, then invest them in securities such as stock, bonds, and other kinds of assets. Next, we will see the benefit of investing in mutual fund. The diversity of investing in mutual fund, which has wide variety of security that they invest from all over the world in every security, stocks, and bond. If one stock drops in value, it doesn't necessarily hurt much because one of the other stock or bonds in the fund may grow in value. In contrast, where we buy individual security, our return depends on just a small number of stock or bonds. Management. We can manage our own finance by picking stock and bonds through online broker firm. If we want to diversify our investment, we can also park some money in bank certificate or deposit and saving accounts. Fund families. We often have to pay a commission now as allowed when we buy or sell share in open-ended mutual fund. Investment company create mutual fund that have a certain objective, such as an incoming generating fund that contain bonds or aggressive growth fund and contain stock from newly launched company. Open-ended mutual fund company create so-called family of fund. This family contains several mutual funds, each of which has a different investment objective. We can typically move money between open-ended funds in the same family without having to pay any new lot fee. Open-ended funds are highly liquid. We can redeem our share at any time. When we turn in a sell order, the fund liquidates our share at the end of next business day, and within a few days, we get our money. Is investing in mutual fund a good choice? There are 8 risks of investing in a unit trust fund. First, return not guaranteed. Investors should be aware that by investing in a unit trust fund, there is no guarantee of any income distribution, returns, or capital appreciation. Second, general market risk. Any purchase of security will involve some element of market risk. Hence, a unit trust fund can to changing market condition as a result of global, regional, or national economic development, governmental policy or political condition, development in regulatory framework, law and legal issue, also external shocks. The third is security-specific risk. There are many specific risks which apply to the individual security. Some examples include the possibility of a company defaulting on the repayment of the coupon of its debenture and the implication of a company credit rating being downgraded. The fourth is liquidity risk. Liquidity risk can be defined as the ease which security can be sold at or near its fair value depending on the volume traded in the market. Fifth, inflation risk. Inflation rate risk is the risk of the potential loss in the purchasing power of your investment due to a general increase of consumer price. 6. Loan financing risk. If a loan is obtained to finance the purchase of units of any unit trust, investor will need to understand that borrowing increases the possibility for gain as well as losses. Other than that is risk of non-compliance. This refers to the current and prospective risk to the unit trust fund and the investor interest arising from non-conformance with laws, rules, regulation, prescribed practice, and internal policy and procedure by the manager. The last one is manager risk. The performance of any unit trust fund is depend among others on the experience, knowledge, expertise, an investment technique adopted by the manager, and any lack of the above will have an adverse impact on the fund performance, thereby working to the detriment of unit holder. After knowing all of those risks and the benefit in investing in mutual fund, you may need to think a lot on how you're supposed to avoid the risk. Risk is unavoidable, and in any task there will risk. Nevertheless, you should bear in mind that one statement in the financial system contract, the higher the risk, the higher the liquidity, means you will gain profit although the investment is volatile.
Okay, let's see. You want to save, but in the same time you want to earn more. How much your profit after investment?
Assuming that you had invest in mutual fund and you initial NNV of 1000 and have an ending NNV of 1100. So your absolute return can be calculated as so here. Your absolute return will be 10% of 1 year holding period. How about when your holding period is more than 1 year? If that case, your return can be calculated using CAGR. Let's see, when you invest $1 in mutual fund 3 years back, NNV of $20, now the NNV is $40, so your return will be 25.99%. This is how the mutual fund works until you redeem your return or profit from the investment. When you invest, your money pooled with the fund manager and invested in security. Then it will generate return and the return will pass back to you. From the calculation, you can see how much your money can grow in a year or more. Now, if there are still doubts in yourself whether investing in mutual fund is a good choice or not, you might consider a few quotes and advice from the experts such as stated next. You invest in mutual fund for your future life. Why you should invest in mutual fund? Because mutual funds are managed inflation, expertise, convince, economical, diversification, liquidity, high return, and safe and transparent. Next, encouragement from billionaire and businessman Warren Buffett, where he quotes on investing, life, and mutual fund. In his own words, he recommends investing in mutual fund. Let's listen the other recommendation by Buffett.
Hi, I'm Brian Diefenbacher. I'm a second-year student. Mr. Buffett, it's great to see you again. I was on the trip to Omaha last month. Thank you for hosting us. My question is, how would you recommend an individual investor who follows the Graham and Dodd philosophy to allocate their capital today?
Well, it depends whether they're going to be an active investor. Graham distinguished between the defensive and the enterprising investor. If you're going to spend a lot of time on investment, you know, I just advise looking at as many things as possible, and you will find some bargains. And when you find them, you have to act. It hasn't changed at all since I was here in 1951, and it won't change the rest of my life. So you start turning pages. When I got out of school, I turned every page in Moody's 10,000 some pages twice, you know, looking for companies, and you have to find them yourself. The world isn't going to tell you about great deals. You have to find them yourself, and that takes a fair amount of time. So if you're not going to do that, if you're just going to be a passive investor, then I just advise an index fund bought consistently over a long period of time. The one thing I will tell you is that the worst investment you can have is cash. Everybody's talking about cash being king and all that sort of thing, but most of you don't look like you're overburdened with cash anyway. So, but you know, cash is going to become worth less over time, but good businesses are going to become worth more over time, and you don't want to pay too much for them, so you have to have some discipline about what you pay. But the thing to do is find a good business and stick with it.
Next, quotes from successful people about investing in mutual fund, where it proved that choosing mutual fund is good.
From the quotes and advice, I believe that I have convinced you investing in mutual fund is one of the best choice you have if you're looking for a low risk, high liquidity gain in any investment scene that you are engaged in. It is really worth to try, and you can invest your money in pleasant feeling through with the risk taken.